Hey everybody, hey, my name is Darius Anucauskas and I'm the global market analyst here at Markets.com. So I wanted to pick up quickly on one of the events that's coming out tomorrow. Today is, by the way, Tuesday, the 11th of March, and I'm recording this one the day before the US inflation numbers are coming out. So I think that that's going to be quite important given the current market situation where everything is in a little bit of a turmoil, I would say. But look, before we jump in any further and we go into all that, let's quickly have a read through our risk disclaimer. So yes, the content we produce does not constitute investment advice or investment recommendation and should not be considered as such. So this material should not be taken as an invitation to acquire any financial instrument or product. So I'll give you a few seconds to read the rest. I'm not going to disappear anywhere. And as you know, yes, we are currently, like I said, we're currently in this moment, in this mood, I think, in the market where everything is just kind of is falling apart. And of course, we understand why, because we, well, understand, apparently the reaction is to the tariffs and that there could be a major slowdown, and everybody's talking about, you know, like, oh, let's start preparing for a recession. So a lot of big words thrown out everywhere. But look, also just before we jump into all that, let me quickly mention of our Markets.com website, which you can always check out for more information about us. So yes, feel free, check us out if you wish. I mean, if you have any questions, reach out to us. We'll be more than happy to assist. So yeah, look. I have this chart here, the Dow Jones Industrial Average, and I talked a lot about this. And if you have been watching my live sessions, like my live webinars, the Markets Talk Show, I've discussed this, and there we go. In a way, mission accomplished on the Dow Jones Industrial Average because I was targeting the lower side of this range. Because again, look, the situation what we're having here right now on all the indices, let me just bring all these onto the table here. Let me just make a few adjustments here and there. So these are all going to be daily charts. You can see that yes, we cleared some key areas of support on the S&P and on the Nasdaq, but Dow here finally kind of reached the beautiful spot here, that the one that I was mentioning in my webinars. So now the question is what was going to happen. And I think that this is a great spot, and I think that this is the point where we're gonna wait for the inflation numbers which are coming out tomorrow, and let's have a look at those. Let's dig in. Basically, here we have the core inflation rate is expected to drop by 0.1%. And the year-on-year, the headline year-on-year number is also expected to drop by 0.1%. So at the moment, this is quite interesting because, as we know, in general, oil has been declining, and the headline inflation does include food and energy prices. But what it tells me as well that we are potentially expecting the the service sector also to decline. So in a way, I would say this maybe is bringing a little bit of problems into the market because yes, the lower inflation, that's great because the lower inflation can help these guys here to to have their 3 cuts by the end of this year potentially, because at the moment this is what the Fed Watch tool is showing, that the Fed will go for 3 cuts by the end of this year. However, this can change very quickly depending on the numbers that are going to come out. Look, at the moment, inflation is nowhere near Fed's target of 2%, so it's still elevated. So in a way, I would say, this in a way should be higher, right? But but I think that. Sorry, on the contrary, this should be lower, but it's it should be lower here. But the fact that it's rising slowly because again the situation right now in the stock market, everything is in this kind of a collapse mode or whatever, everything is selling off and everybody's now like in this panic mode and thinking, oh my god, so, and that's why we're seeing this rise, and potentially having like 3 cuts by the end of this year. What's interesting is that now the probability for having 4 cuts by the end of this year is actually greater than having 2 cuts. So it's, yeah, we're on that wave, on that in that trajectory. However, in the upcoming 19th of March interest rate decision next week from the Fed, we're not going to see anything. We're just going to see like a flat, same figure, nothing major. But it's going to be quite interesting to see what's going to happen. How the Fed, how Jerome Powell will be, expressing himself and how he will state and how confident he is in terms of going for further rate cuts. Now, of course, we understand that this is what the current U.S. administration would like to see. They would like to see that, those maybe 3 rate cuts coming up, to make lending cheaper. But the only problem is that, look, inflation has been a little bit on a rise, and yes, we're seeing a decline or a decline in the forecast. However, will that be the case? Look, if we do come out on the lower side, maybe this could help the indices to get a boost back up a little bit here. But again, I don't know, it will be really a moment of interpretation, because if inflation comes out on the lower side, let's say, okay, how much lower? Let's say it comes out lower than the forecast. And yes, that's kind of putting, the Fed closer to, hiking more this year by the end of this year. And in a way, we could see, the indices kind of reversing course and pushing back up a little bit, basically rebounding. However, the rebound might be short-lived because, again, because the market might interpret this as if it's, let's say, we're having lack of growth, or maybe we're seeing not maybe even lack of growth, a slowdown in growth. So we know that like a little bit of inflation is good, because this is how we show that the economy is working and it's growing, and maybe that could also spook the market in general. If I'm going to jump into weekly charts and all these indices, all these US indices here, you can see that yes, we have been on a like a nice decline here. The Dow looks the best in a way, because again, at the moment, it's forming something of a range. Some of you might say, but hey, maybe Dow is ready to break the neckline of this double top here. Well, look, it can be the case for sure. We're currently resting on near this 50-day EMA here as well on the weekly chart. On the S&P and the Nasdaq, we have broken the necklines and we have fallen below the 50-day EMA. However, these are still weekly candles and we are in Tuesday, so just be careful. Maybe we'll just create a nice false breakout here, and if at the end of the week we remain above the 50-day EMA here on the S&P and the Nasdaq, hey, maybe we could be due for a bit of a reversal back up, going into that Fed meeting next week. Let me just show you what I'm talking about. So where's that? Wednesday. So yep, this is what I'm talking about. So interest rate decision coming up on Wednesday next week. So look, this week all the focus is on the US CPIs and what kind of reaction we'll get in there. After that we'll get the interest rate decision from the Bank of Canada, but okay, that's a different story already. I'll do that. I'll do maybe a separate video. We'll see. Maybe I'll do a separate video on that one. But again, looking at this picture here, yes, the indices are in need of some sort of support. So maybe the CPIs could be that. Let's keep an eye on that, of course, but the current ongoing position of the current U.S. administration, that that they're not really bothered about the fact that if there is a market correction, a strong correction in the market or something, I think maybe that's even what they want, because again, look, on the contrary, I mean, on the other side, in a way, you would say, hey, but the stocks were at such high levels, we needed some sort of a good retracement. And if we take a look at this here, let's say if, we look at the S&P, right, and we apply our beloved Fibonacci from the lowest point of 2022 to the highest point of this year, or actually probably more last year, this, right? Yes, no, this year still, this year, basically to the current all-time high. So you'll see that we have approached almost the 23.6. Now again, it really depends on how you're going to draw it. Maybe you're going to draw it from this point here, and you will see that, oh, there we go, and you'll see that we did already that 23.6. So look, it's really, like I said, up to interpretation in a way. Like, it's really subjective. So I'm having this one as a rough sketch here on the chart, but mainly the focus is on the levels and some of the EMAs here, if we're talking about the technical side. Now, very quickly, I wanted to pick up on the DXY, the dollar index. Let me just jump into that one. So yes, on the weekly, from the weekly perspective, you can see that it continues to slide, and there is still a good chance to drift towards the 200-day EMA. So if inflation comes out on the lower side, then if CPIs come out on the lower side, then basically we could still see the US dollar drifting further south. And by further south, I'm kind of aiming somewhere around this 102.5 zone. That's where my 200-day EMA is shown as the white line here. On the weekly chart, by the way, on the daily, we are breaking some a key area of support here, which I talked about previously, this 103.26. This was a good area to watch, and we're now clearing it. So hey, I have this 101.84 zone. I do like it as well, but I think that given that it's maybe a little bit too much here, maybe a bit of retracement is needed, but still you do not want to exclude the downside, then this is where the weekly chart comes in perfectly, because as you can see in the past, apart from this little moment right here back in August, September of last year, the 200-day EMA has been acting as a good area of support. So that's why I'm gonna aim for that one for now. I think it's a good one. If we're seeing further declines here, then potentially we could see, let's say if you're trading euro dollar, we could see euro dollar drifting a little bit more to the upside. Maybe, just maybe, like I said, we could consider this as a next target, this downside line, but again, that's already like above the one psychological 110 zone. So at the moment I'm kind of aiming for that 110. I think that's a good target to aim for. But hey, look, we've already approached my target, which was around the 1.0936 zone. I talked about this in my webinars, which you can always join if you wish, or you can watch a recorded session. But yeah, look, I mean, at the moment we're here, and if there's more downside for the US dollar, then certainly we could even see this push towards this downside line taken from the highest point of July of 2023. Good potential target, but hey, I mean, I do understand it's quite extensive here, but I think that we're going through right now a little bit of a crazy moment in the market, so anything is possible, and that's why we could get a lot of these one-way traffics. So just be careful and be cautious about that. So, ladies and gentlemen, that's it for this video. I mean, I just wanted to pick up on the US CPIs to prepare you for tomorrow. I think it's something worthwhile for the traders. So yes, as always, stay safe, have your stop losses in place, risk only what you can afford to lose, don't overtrade, and everything will be fine. Let me know in the comments what you think. Would really love to know your opinion, but hey, thank you very much for your attention. I'll see you later. Bye-bye.